trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
The stinger is not running. There we go.
Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fine.
Good morning. Wow, that was kind of weird. Make sure my headphones sound a little bit weird. I think we're okay. All right, and how are we on time? Okay, we got about 2.5 minutes until the retail sales. I tell you what, this was a packed week on news, and we got some really good news trades off of this. I mean, I took a trade off of both of those this week so far, right? Are these retail numbers going to move the market a lot? Probably. Well, I mean, it depends on the specifics of the news and everything, but well, let's see here. Let's come in here. They're looking for U.S. retail sales month over month, spot 2, and core retail sales month over month in negative spot 1. So if, for instance, that core retail sales month over month instead of a negative number was a positive number, that would probably affect the markets pretty significantly. If the retail sales number, like the core retail sales number, was much more negative than anticipated, and look, it could be like negative spot 5, right? Then the treasuries are just going to shoot out here. But it depends. It could be close to in line. And another thing you got to keep in mind with retail sales is that Bank of America, I think it's Bank of America, uses their credit card data to predict what the retail sales is going to be. And they are extremely good at predicting it. So that is one that there are some players that can kind of front run a little bit. So that maybe reduces the impact a little bit, but it is still one of the top 5 biggest pieces of news every month. All right. Are you bullish or bearish on the NASDAQ? Well, so we are coming in with a pretty big loss this morning. I'm going to wait until after we have the news to really take a solid look at all of the instruments and what's been going on. But, you know, at the moment, I kind of think the downside's not a huge deal. Okay, so here's the news. And we get core retail sales month over month in negative spot 2 versus a negative spot 1 on the core. So that's, I'd say that's pretty good, right? That's lower than expected. That's going to be good for the interest rates. And but it's not like, oh man, this is a recession, etc., etc. It's kind of more like things that are cooling off. So I like that. What was the headline number? Retail sales month over month was in line with expectations. So we're probably not going to move too much on that. I'd say it's good, but I don't think we're going to see a lot of orders come out because of that. So let's come over and look at a few charts now. ZN. So yesterday, after the PPI, we had a pretty good move up. We didn't beat the high from the CPI, but we had a good move up. And this just kind of looks like your natural pullback. So we have the beginnings of a trend going on here in the treasuries. The problem here, though, is I don't know if there's any other catalysts to continue pushing it up. And I'm not really seeing anticipated flows that really push us either. We would really need to get above the 109.12 area to start getting some of those like momentum flows and things like that that could continue to push us up on its own. So we may just kind of chill in this area, especially since I'm kind of expecting that things might really accelerate over the weekend with Iran, right? Well, we'll see. Next week, they're supposed to be starting to hit dual use targets. So, all right. So here's the S&P 500. Yeah, we're down overnight, but that kind of seems to me to be more profit taking more than anything. I don't see like a new flow coming through that really changes the balance of power in the market here. So oil kind of stuck in a range despite things escalating in Iran. Gold and silver, well, silver is looking a little down, so that's one on kind of is an indication of sentiment. It seems like maybe retail risk appetite is maybe taking a hit, and you often tend to see that in silver, at least right now. Copper also kind of going sideways past few days, which is curious. And the Japanese yen really stuck. Well, we would be careful if we see the Japanese yen make a move. When you're getting volatility compression like that, that could lead to some movement. And then Bitcoin pulled back a little bit from its gains a day or two prior, but nothing too significant. So, I don't know. So, Vital was saying I should take a trade in NQ. Like, the first thing I'm noticing when I look at NQ with this kind of setup where we're using a really huge tick aggregation so that we can kind of see the liquidity over here a little bit better. I don't think that it's really very ripe for this kind of a trade before the open. In fact, before like 7 o'clock, it kind of seems like, I don't know, like, will I really get filled on both sides of this is a little bit questionable. So I don't know if there's enough volatility in it to get that 32 ticks or whatever it is that I'm going for. So I might wait until after the top of the hour or after the market open to do that. And I am more interested in trading it when we're in a mean reversion area. So basically, I'm watching the liquidity and I'm looking for an area where I think that the liquidity is kind of pulling away and causing mean reversion. So that's what I'm looking for. Which means I might want to wait until after the initial drive in the S&P 500. I think, though, that I want to mess with this more and more because, I'm starting to think about how I want to promote my trading platform and all of that. And if all I'm showing is taking trades in the treasuries, well, nobody's going to be interested in using my platform for that. So I'm going to have to, and we're probably going to have to sell it to prop firms. So we're going to want to show them how advantageous it is for prop firms. But I think we're going to have execution in our platform first before I worry too much about that. How about NQ trade to the VWAP? I mean, if I had some evidence to really strongly suggest that it will come back. So we did a little bit of this. Well, so actually, let me start over because this is kind of one of the things that I was maybe thinking about making a TikTok about, actually. So one of the questions I think is really interesting ask traders and can generate a lot of engagement is to ask, what is the thing that you wasted the most time on? So something that you really thought that there was some edge in it and you spent a lot of time on it, but then eventually you gave it up. And for me, it's VWAP. The very beginning, for the first probably 2 years of the stream, I had a VWAP. I had my own VWAP indicator that made VWAP bands that was pretty good. And you know, I relied on it a lot for my decisions. I mean, I don't think that as time went on, you know, I kind of gave up on specific setups, but I would still, you know, based on whether it was above or below the VWAP, for instance, whether it was moving towards the VWAP or away from the VWAP, I would do things, right? So, and kind of what I found was that there. Ooh, okay. Did I miss something here? Hold on. They moved X Pro to the $20 a month subscription. I could maybe justify that, but Bank of America CEO Moynihan, consumers continue to spend. Is that what pushed us down? Okay. You need to change the label from on the name of the stream, you mean? Anyways, what I found was that there were some really niche situations where you know, you would get a way exaggerated move, and there was a tendency to be able to take a reversal there back towards the VWAP. But what I ultimately found with that was that it was a very risky trade that had very fat tails. So it was very hard to collect enough data to really see the behavior of it. But as I started to trade it, started to find some situations where you'd get screwed over really, really badly. And I eventually gave up on it. So one of the things... Oh, the label's on the top. All right, yeah, okay. I think I can change that here really quick. And Q. So yeah, the interesting thing with VWAP is that there was a time where the institutions relied really heavily on VWAP execution. So that's the first thing is that was an execution strategy. Whether we were above or below the VWAP and whether they were buying or selling, you know, that would change how aggressively they would buy and sell. Right? But the industry, by and large, I think eventually gave up on using that, on using VWAP. It's much more common to use TWAP, time weighted average price.
Block sell.
Just distributing your orders over time. And then later they found things like Omega and Chris, where they kind of realized that really what mattered was adjusting your execution to the current liquidity conditions and changing whether you're executing more at the beginning or more at the end based on things like how much risk you're willing to take on and your anticipation of the trend and so forth. Okay. So, yeah, I don't know if there's really actually an edge that you can gain. Certainly, I'm really skeptical about that there's a mechanical day trade edge that you can gain from VWAP. I've created a couple of tools. One of the things that I've got is VWAP typical, which instead of calculating it based on looking at all of the volume, we just find the typical price for that bar and we set that to be all of the volume. And you still get an objective number that's the same. You go back and recalculate it, but you can recalculate that much more quickly, and it's like 95% the same as VWAP. So that allows you to go back and do much more comprehensive back tests. Well, so we were showing this the other day. Do you remember talking about this thing, Vital? I pulled the strategy analyzer up. And here's a strategy called Gravity. If you come back and look at the chart, let's see if it will pull up. I should maybe just have it run again, because it'll run pretty quickly. Probably if I reran it, it would be faster than it trying to regenerate the report right now. Okay, there you go. For the first, so going back to 2014, for about the first 5 years of the strategy, it's kind of random. Then starting in 2020, it started to do really well. And then since that time, it's kind of been flat. It does okay-ish sometimes. And there's pretty big, it seems like, that's not bad, but these drawdowns are actually, $50,000 on one contract. So would you want to actually use that strategy? I don't know, but it is net profitable and it does use VWAP. So, and it is net profitable over a really long, a really long time frame, a lot of data, right? 35,000 trades. Wow. But when you come in and you look at it, there's some interesting things, right? It only wins a quarter of the time. It wins a quarter of the time, but it has a ratio average win average loss of 3.22. So that's where the edge is coming from. Doesn't catch it every time, but when it does, tends to win more than it loses. Okay. Then when you come in on probability, probability is one that I would always take a look at. If you have really low probability, it's kind of saying to you, well, the profits are coming from like a very small number of trades, and the chances of these numbers holding when you go over to live are really low. And I find that it's really hard to get a good probability, but 28 on the short side is pretty darn good. So, and the Sharpe ratio though is 0.18 on the total here. Profit factor 1.04. It's not actually a very effective strategy. Like, it's net profitable, but you would have made more money just doing buy and holds. Just buy an S&P 500 future and just hold it. So, but it uses VWAP. It uses VWAP. I'm gonna close that. Maybe we could come up with a better strategy. When we get our platform a little bit more mature, we'll probably have a binge where I kind of spend more time on strategies like that, right? Do something where I include, like I think if you take that and then you include a couple of other features and run a random forest on it, or even better yet, we run XG Boost. Hey, maybe it turns out to be a great strategy. I don't know. Okay. VWAP standard deviation bands for mean reversion. Yeah. I'm trying to remember what it was that I was using for my standard deviation. It was different, but anyways, I had VWAP bands. Where if you were, you know, like if we moved above, that was the thing that I was talking about earlier. That was like, that's the thing that I feel like I wasted the most time on. It was like, if you got 3 standard deviations away from the VWAP, then you'd take the short. And, well, it turned out to be not as good of a trade as it seemed. Okay, so oh, you know, kind of a leftover question, Benjamin. Oh, you're a smart guy. Thank you so much. People always tell me I'm smart, and I'm kind of like, well, everybody keeps telling me that. I think it's true, but I don't see why I'm so smart. I think when it comes to futures trading, here's the thing. Because let's admit it, I am a huge outlier in the trading influencer community. If we're honest, I'm a trading influencer. Is that the best category that we'd put me in? I don't really consider myself a guru. I don't kind of put out this like, oh, well, if you follow me and do everything that I say, then you're going to be successful. I'm kind of explicitly telling people you're probably going to lose money. If you're in this solely because you think that this is going to be your career and you're going to make a living from it, stop now. You need to have other reasons to do this, and you need to have other income. Okay. But if you already have good income, like you're a tech worker, you're kind of in the top percentiles of income, and you have the time to sit and do this every morning, and you enjoy reading about the markets and understanding what's going on, and you understand the math behind it. You know, you enjoy the math behind it, and you enjoy searching for edge in all of this data, and you enjoy sitting here and watching the DOM and hearing the news and talking to traders, then it can be really rewarding. But it's going to be more personally rewarding than it is monetarily rewarding, right? Most of the time, I am able to pay for my data fees, and that's about it. So, and every once in a while we'll catch a big winner. And we've gotten pretty good at avoiding the losers the past few years. I don't think I've had a really big blow up for like 3 or 4 years now, so I'm kind of explicitly telling people not to do it, so that's why I feel like I'm not a guru. But among the day trading influencers, I'm super, super different. I have a completely different approach, and I'm constantly watching other people say, this and this, and I'm always saying, no, that's wrong. Here's the data. That's wrong. Here's the data. What's different about Seth? Is it because Seth is more intelligent than everybody else? I mean, maybe it plays a role, but I don't really think that's the primary factor. I think the primary factor is that what I'm trying to do is just harder than what everybody else is trying to do, right? I am trading 10-year treasury futures. So when you come over and you trade something really volatile like oil or NQ or whatever, it's moving around all the time. If you have targets that are close enough, you're going to get hit all the time. And the way that randomness works, you're just going to have good streaks and stuff. The treasuries don't do that. If you don't have an edge, you're going to come out on the losing end in treasuries almost every day. Like, it just doesn't. It's really hard to get to a point where you're even pulling out winning days, let alone winning months in the treasuries. It just doesn't play along with your illusions the way that other instruments do. And so you kind of learn the things that are tricking everybody else really, really quickly. And then I've gone through and tried many different things and failed many, many times. So I just have a more complete view of the market than most other retail traders do. And then on top of that, we've always understood that understanding what's actually going on, looking at the fundamentals and everything, is a really key part of the market as well. So most retail traders are explicitly avoiding knowing anything about what's going on. So it was actually I need to write a post. I'm going to avoid doing it today, or like writing it now, but I'll talk about it. This thread was so interesting. Oh my gosh, guys, this was just a good story. This is from Successful Fold 5213 and the r/day trading. So we are talking about day traders. What does he say? After a long hiatus from trading. Hold on, let me blow my nose. After a long hiatus from trading, I have come back and have gotten profitable relatively quick. Already getting funded. I've been taking a few years to try and learn what actually moves the market, focusing strictly on fundamental long-term pitches. I decided I wanted to try my luck with trading intraday, as I noticed that a lot of my approaches were solid for single-day movements. I recently decided to join a community Discord to talk about trades with other people, and good lord, are the majority of them absolute idiots. This is the server of one of the largest prop firms in the world, and half of their live traders, quotes, live traders, aren't aware what CPI is, and are absolutely befuddled by the fact that oil is up. I could probably find 50 images of people drawing fair value gaps and whatever the hell on oil and gold's daily charts. Some of them proclaiming that oil is up to return to a value zone, and not the fact that the US is bombing the crap out of Iran. Do self-proclaimed day traders just completely ignore any sort of fundamentals? I guarantee that if these people just took a step back and tried to understand what was going on from a macro perspective, they would almost certainly lose less trades. The more I read these chats, the more I realize why the failure rate in trading is so high. People spend years searching for secret indicators and smart money patterns while completely ignoring the information that's literally driving the market. It just seems so backwards to spend hundreds of hours memorizing ICT concepts while spending zero time understanding the asset you're actually trading. Is this just the reality of retail trading, or am I getting a skewed sample from Discord? Oh my gosh. I feel like so seen. This is exactly how I feel, and this is exactly what I've been ranting about every day for like 6 years now. And I feel like he says it so much better than me too. This is where I come back and I'm like, am I really actually smarter than other people? I don't actually think that I am. I think that my IQ is probably like 110. And people talk to me like, oh, you must be 140 or no. I'm not some genius. I'm just your average college educated guy. And I'm not even necessarily the most eloquent or anything like that, or have, the way of saying things that resonates with people the best or anything like that. I've just been doing it so long. And here, this guy, I just totally feel his frustration. I want to believe it actually is slightly a skewed result from Discord. The oil thing was a good one. I enjoyed that one. Well, so what does he say in here? There's an edit that I haven't read. Let's see what the edit was. Apparently, I hurt the feelings of a large amount of people on this sub who immediately disregarded any of the other points of this post. Most mentioning how I'm using a funded. For context, I am strictly using it to fund a personal account. Yes, I'm well aware that prop firms are not good and commonly used by the very traders I'm talking about, but it is much more efficient for me to build capital using said firms until I have a comfortable amount to allocate. So they're saying, oh, well, if you're so good, then why are you using a prop firm? Gotcha. I mean, I think the thing is, though, like when you say it's a skewed result from Discord, the majority of retail day traders in the space now are trading prop firms. It's just those of us that started before that are trading our own and that have started since then and started our own accounts are very, very few compared to the numbers that are being pulled in from prop firms. And the prop firms are putting a lot of advertising into it, and that advertising is extremely effective among a certain type of person, and they outnumber us like 100 to 1 as far as I can tell. And the thing is I think that this is kind of a larger that people come to this conclusion because of the larger things that we've been told about the markets, like at a societal level, and what beginning traders are taught. What are we told? We're told that the market is perfectly efficient, that it makes the correct decisions in all cases, and all available information is already priced in. You go and you read the technical analysis books, like the Technical Analysis of Stock Trends. That's that was the first. That's the originator of all of this stuff. And what do they say in that book? Current prices reflect all available information, but there is a tendency for asset prices to trend on very long time frames, and you can make money from that. That's their whole theory. And so if you just accept that theory, then that means that you shouldn't have to pay attention to the news because it immediately gets reflected in the price. And that's all there is to it. Right? So, but this is why I hammer so hard on markets are statistically efficient, but not informationally efficient. They're statistically efficient, meaning that, especially on intraday timeframes, if you go and you look at the price and you analyze price any which way, it's very difficult, if not impossible, to find a consistent pattern that you can make money from. And we know why that is, too. It's because orders have impact. Orders have very strong impact. And so if there is a pattern, people trade it, they're able to eliminate that edge from the market more easily. Okay? If markets didn't have so much impact, then there would maybe be more room, and then maybe pattern day trading would be a thing. But then I kind of think that it would still be self-defeating, because it would just mean more people would come in and pattern day trade, but they would still eliminate the pattern eventually. Anyways. But markets are not informationally efficient. The price that you get is not a function of what is the perfect price based on all available information. The price that you get is based on the orders that people submit into the market. And that doesn't match up with what the actual information is. There are these large funds, and they have to allocate money, and they put it in, and it will move the market a certain amount. And so if you have price is perfect right now, and then the fund comes in and has to put the money in, they're going to move it away from that. So you find that price is almost never at that theoretical perfect price. It's all about orders. Once you understand that, then you realize, oh, there's all stuff that's not reflected in the stocks all the time. And sometimes you can look at that piece of news and you can say, there's going to be orders coming in imminently off of that piece of news, and that's not reflected in the stock yet. So now I can buy it safely. Right? And that's essentially what we're trying to do. Now, the one thing that the technical analysis of stock trends did get right is that prices do tend to trend on very long time frames. So all of the chart patterns and things like that, kind of questionable, but some of the information that it gives about how to set up trades and manage a portfolio and things like that do make sense. And it turns out you come in and you're able to, look at the correlation between assets and do proper risk management and get a good back-tested setup that predicts when an asset is going to start trending, and you hold it. You have a good system for telling you how to hold on to it so that you can hold on to it for winners that are like 100 to 1 your average loser. Then that's a momentum portfolio, and there are a lot of funds out there that do that, and that is a proven edge. Interestingly enough, we have evidence to suggest that this tendency to trend on very long time frames again comes from the fact that the market is not very informationally efficient, and that it's really the orders that drive prices. So if that's the case, then you could have a major change happen, and it could take days or months for the markets to accurately price it in. So oil is a really good example here. Oil is still driven primarily by the people that have to come in and buy and sell crude oil futures for their business. And so you can get this situation where, there is a big geopolitical issue and it jumps up, but then it continues to just slowly grind higher over several months. And you're like, well, shouldn't that all be priced in at the very beginning? No, they can't. It doesn't work that way. It's the orders. The orders don't necessarily correspond to all available information. Okay, so I made a post in here. I said, that's exactly it. I said basically just what I told you, but I'll read it anyways. That's exactly it. People have been told markets are perfectly efficient and accurately price on all available information, so they think it doesn't matter that I don't know what's going on because it's always priced in. The truth is the opposite. Markets are statistically efficient. It's hard to make money from a price pattern, but markets aren't very good at pricing in all available information, which means there's edge all over the place on the fundamental side, even if it's less reliable. Traders leave the most available and important edge on the table because they misunderstand the fundamental nature of the market. And the empirical evidence, this is just what we understand from the empirical evidence. So somebody responded to me. Let's see what they say. My counter to you is always, if I could go back in time and then 6 months ago, and you get to ask Google and read about every piece of news, but you can't see anything about prices, how would you do trading? The answer is 9 of 10 that you would be the worst. This is where the news matters breaks down for me. In my view, news is just how entities move money, not entities move money because of the news they hide behind it. Okay. This is kind of a funny scenario that this guy sets up. So if I could go back 6 months ago and read all of the news, and then you can't see anything about the prices, can you trade effectively doing that? Yes! Actually, yes. Especially if you're looking at day trading. My goodness. You're talking about day trading. When the CPI got released, I didn't go in my head and say, well, the CPI number was this, and the current price is this, so the new correct price is going to be this. Oh, we're not there yet. I'm going to buy. No, that's not how it works. Nobody does that. You know what they do is they say, oh, here was the news. It was good or it was bad. I'm going to buy. And they don't care what the current price is, guys. They don't care. What actually moves the markets? The orders. If you can predict the orders, you can predict exactly what is going to happen in the market. It is a direct function. It is current order book plus market orders will result in a price. And you can go back and you can run that. If you create the exact same liquidity conditions, submit the same orders into it, you will get the same price out every time because it is a direct function. It's just the matching algorithm at the exchange. So we have to predict the orders. And what I do is I say, okay, based on CPI, I think I'm going to see this many orders come into the market. I'm going to see this much buying come into the markets. And if I haven't seen that much volume come through yet, then I buy ahead of those other buyers. And that's it. And I don't care what the price is. Okay. But even if you're like swing trading and stuff like that, what you do is you just look at all of the information that predicts orders, which includes news, but includes other things like positioning, etc., etc., etc. But that can all be done without looking at price. Can all be done without looking at price, predicting orders that are going to come in and fronting them. 100%. It can be done without price. Now, if I was going to do such a system on a higher time frame, I would probably want to include some component that looks at what momentum traders are going to do. And a lot of momentum traders are based on prices. So I am going to include that. But you don't need price. Well, let me read the rest of the guy's posts. We don't even have to talk about the big C. I think that must mean CPI, but let's look at the example from OP Oil in the Iran war. 6 months ago, oil was at $60. Nothing had happened, but it was just about to hit the fan. So where would you guess oil would be? $100. News you see, Strait of Hormuz closed and bombing reinstated after the talks fall apart. CPI is at 3.4. Oh, that's surprising considering the facts. Now you get to hear about how Hormuz is to the world economy. People literally on every news outlet and on here on Reddit said $200 in oil is almost certainly if it stays closed past May. Well, then here we are, and a few days ago we touched $66 a barrel. We have another spike, but only to 80. Well, the problem there, what is this guy's name? RITH Sleeper? Rith Sleeper? I don't know what that's supposed to mean. That's just that you're listening to the wrong people, man. Because when this all started, and you go and you look at like the reports that came out of the commodities desk from Goldman, I would say that they were pretty accurate about where things were going. And they never said $200 a barrel of oil. That was just the hyperbolic lefties on Reddit that want to make everything out to be a huge deal. And, you know, will overemphasize the impact that this is going to have, right? I remember Iran saying $200 a barrel. And I remember a couple of scenarios where, like, if X, Y, and Z continues, it could hit 200. But those things never happened. And now it's been long enough that people have found ways around the strait. So the amount that it affects the actual supply of oil is a lot less now. Up to 80. It could still go back to 100, though. It could still go back to 100. Here's the risk right now. Is if the United States begins striking dual-use targets, Iran will probably target oil infrastructure in the region, which includes the very pipelines that they are pumping everything through to get around the Strait of Hormuz. So that could be a problem. How capable is Iran now? And how good is the U.S. and its allies' defenses? Unclear to me. So far, from what we've seen, the attacks coming from Iran have been pretty impotent. Like, they don't have nearly as many drones coming out. The drones aren't being nearly as effective. It's like a lot of the drones are kind of like broken ones and things like that. I think that a lot of what happened, and this is also something that gets really, really difficult, is that every country has its propaganda, right? And the United States does propaganda too. I would say that United States propaganda tends to be more along the lines of what we choose not to tell you and what we choose to focus on. But it seems to me that it's been a little bit different during the Trump administration. Am I wrong? I mean, I can't really prove it, but it seems to me that there are times where the Trump administration says things to try and make it seem like everything's going hunky-dory. We've destroyed everything, all of this sort of stuff. And it's not true. And I don't know if that's that they are intentionally trying to mislead the public to make it seem like the war is going better than it is, or if maybe they're being misled by, because this is something that happened during the Vietnam War, especially, was that they started to take this numbers-based approach to everything. They said, well, this is what we do in business. It should work in the military. And so we want to hit X number of, Viet Cong killed and all of these sorts of things. And so then the military would go out and do things just to hit those numbers. And they weren't actually being effective. It wasn't effective at actually winning the war because they were just trying to hit numbers. It's, what is it, Goodwin's Law or whatever, that when measures become targets, they cease to be effective measures. That's what happened. And it could be happening right now. That they're trying to optimize the number of targets that they've hit. And so it seems like we've done everything. But then when you actually look at how much it's actually degrading their capability, it's not as much as it was. Right? I think that is happening. But at the same time, it also seems like that on this second round, you are now kind of starting to see where Iran's capability is at and that it is significantly degraded. So, I mean, that probably means $200 barrel oil is probably not going to happen. There's another fundamental that we have to consider right now, though, which is that they're hitting oil refining in Russia. So it's actually starting to turn into that maybe what's going on in Russia will matter more. Man, I tell you what, you know how, like, there's this thing that, like, once you become 35 years old, there's one of those pick a class sort of decisions in life. You know what I'm talking about? Like if you ever play Stardew Valley, and when you level up to a certain level, then you get to pick, okay, am I going to be an artisan or am I going to be one of these? And there's two different benefits that you get from them, right? And you get to pick one or the other, right? And at 35, it is, you can either be an expert in smoking and grilling or an expert in World War II. Yeah, that's the thing. I'm starting to think, granted, this could change because maybe things just get worse and we get actual World War III. But I think that the thing is going to be becoming an expert in the Ukraine war. I think that's going to become the new thing. Like, it is interesting, man. There is a lot of history that we've been following here, and the development of the technology, and what does what we're seeing in Ukraine mean for the future of warfare? I don't think that we have seen anything like this, anything even remotely close to this, since maybe the development of rifled barrels prior to the Civil War. Like, that's how big of a technological change we're seeing in the Ukraine war. And maybe we have to go back even to the what is it? The use of guns in general in warfare to go back to see such a big change. Because man, this stuff that they're doing with drones and everything is crazy. And now you got things with like the United States is sending out suicide drone swarms and stuff. It's nuts. There's like they do jamming, so now they've got fully autonomous drones. This bonkers stuff, man. Maybe I need to switch. You know, I'm constantly thinking like I have this kind of like back and forth between like I want to go and be in the industry that's making the most money and the top whatever. You know, I'm ambitious like that. And yeah, but I don't want to move and I don't want the stress. And after I stopped working at the bank, you know, I got hired somewhere else pretty quickly. I got a good deal, so I took it. It changed very little about my daily routine because it was like in literally the same building. And I very quickly was like, oh yeah, this is a lot better than having people scream at you all day. Nobody screamed at me at the bank, but I mean, it was stressful, right? It was stressful. And now I'm kind of like, but maybe I should do more. Well, there was a time when I was spending a lot of time thinking and learning about machine learning and stuff. And large language models was kind of on the horizon, and it was just kind of like a novelty, you know. And could I have said, yes, that's what I want to do. These open AI guys, I think that's the future. I should go and work for them. And if I had tried really, really hard at that time, would I have gotten in there? Yeah, maybe. I think so. Hey, you know what? Probably still could. But I think that to do it now, I would have to like take 3 months and study. Then I could do it. I got other things I want to do. So like, what's the next thing gonna be? Maybe it's drones. Maybe drones has already played out too. Maybe we're already kind of like it's getting too popular and I need to look for something even further ahead than that. I don't know. Quantum computing. I wanted to experiment with laser drone signaling to see if it can bypass a stronger level of jamming. Why? It sounds like fun. Yeah. Well, and I would really like to just get into flying drones. That looks like you seen those things where they get the headset and they're flying it in first person view. That looks like so much fun. And that's the sort of thing that I'm good at. I've always been good at controlling. I also would really like to get a racing sim. You know, these are other things that's like, well, if I wasn't building my own trading platform and I decided to just go all in on some form of entertainment, it would be one of those two things. But I do not have the time or money to inject those things into my life right now. I remember how I brought up 3D printing before and how y'all need to get into it and you can make drones. Yeah, I do. But you know what? I if I get the 3D printer, I'm kind of hoping that my wife would get into it because I think that she could really enjoy that sort of stuff. The thing that I find interesting about my wife's hobbies and the things that she tends to get into, she will also go through this cycle of like intense interest on a thing for a short period of time and then kind of we forget about it. That's why I often tell her like, well, you definitely don't meet any of the diagnosis criteria for ADHD or autism or anything like that. But you do have some of the traits. It does run in your family. You probably would never have gotten together. You probably would have been instantly repulsed by me if it wasn't for you seeing these patterns in your family and thinking that they're normal. So you have some of the traits. But she's able to get into things that most ADHD people will never be able to get into. Okay, like she absolutely loves doing these little I think they call them diamond paintings. It's like you get these teeny tiny little squares that's like a pixel, and then you stick them to a piece of paper that already has the glue on it or whatever, and then it makes pictures, like pixel pictures. She loves doing that. And to me, that's so tedious. Oh my gosh, that's so tedious and boring. Just the same thing. Handwriting. The handwriting is the current hobby. I haven't been doing as much handwriting as I need to because I'm spending all of the time writing my platform. But the thing that's cool about handwriting is that handwriting has a very high ceiling, right? So the skill expression it's like one of the ultimate skill expression hobbies. So that's why I like handwriting. That's about the most tedious that I can get, right? So she can enjoy things that are very much like performing the same action over and over again, and things that are very, very tedious. And so to me, that's like, oh, so you would probably be good at things like video editing. Video editing can be tedious, right? 3D modeling, that sort of a thing. And she's kind of artistically inclined anyways. So I think if we got the 3D printer, I'd hope that she would use it more than me, that she'd spend all day browsing through Thingiverse. Oh, the kids will like that. I'll print that. She knows how to use the printer. And then that turns into, well, but I would like it to be like this. Well, here's how you change that. 3D printing with quality now costs less than a PlayStation? Really? Well, it's still, well, how expensive has the PlayStation gotten? Because well, you're right. There are cheaper ones. But I wanted like one of those Bamboo Labs that are like $1,000. Which I can do, but I have like a whole list of stuff I got to do in front of that. I'm thinking though, at the current pace, assuming that the company that I work for doesn't file for bankruptcy next week, I will be getting there in a few months, and then I can do it. And I think that the boys are old enough now that they will appreciate it and not just cause problems with it. Because I think they're going to want to watch it, probably. Oh my gosh, I'm a car guy. You want to know how to relate to 90% more guys with your handwriting and in a way that's super cool and shows your insane skill and control? Hand pinstriping. I don't think that I'd be good at hand pinstriping. The Bamboo Lab one, that's the best with all the features and color change. The full big combo. No, it's not that cheap now. Like the one that is just one color, but it's enclosed, I thought was $1,000. Maybe that was 3 years ago. Maybe it's changed. I did go on a binge for a while where I just did nothing but watch YouTube videos about 3D printing and learned quite a bit about it. So it's there. But like seriously, right now, guys, it's literally come home, work out, work on the trading platform, go to sleep. So what I did yesterday, I didn't even work out. Oh, I've been I got a rower. Ooh, I like the rower. I rode on Sunday and Monday. Because it used to be I would work out Monday, Wednesday, Thursday, Saturday. Sometimes I can't even work out on Saturday. And I'm often like too tired to work out on Thursday. But I can't work out on Wednesday because that's the day that all of the church activities happen. and I can't work out, or I'd prefer not to work out on Monday because Tuesday and Thursday are the days where I'm work from home, so I can start my workout early, an hour earlier, right? Fits in the schedule better and everything. So I've been doing Tuesday, Thursday, but I would still like to work out on Mondays. Like when I get to Monday, I'm often feeling antsy, especially if the last time I had worked was Thursday. So you get the rower, and rower is good cardio. It could do 15 minutes. I don't know how many calories that burns, but 15 minutes definitely gets me tired and sweating and everything, and it's full body. But I did it Sunday and Monday, and then I worked out Tuesday, and then Wednesday I had a late lunch. And I just felt so spent. We'll see how I do today. We'll see how I feel today. But yesterday I felt so spent. So I didn't do the rower. I just went straight to coding. I got all of the session stuff worked out. We should actually pull that up now because we've got the S&P 500 starting. Oh, and I need to add the indicator because I have the opening range. I have to. Well, let's just restart the platform and rebuild because there's some other things to pick up too that it changed. Pick up Embu Lab PS P1S with AMS2 Pro combo. Like one of the things I think is a little weird on the 3D printing side is like switching colors is a big thing, and that doesn't interest me too much. I'm really interested also in the resin printers, but I don't think that I have anywhere to do that where it wouldn't smell and we have adequate ventilation and it's not hot. Because like you have to do it outside or something. I don't know if that one. So I don't think that I'd get a resin printer. But I think that they would enjoy it. So the thing that my wife loves doing the most is printing ceramics. She loves, and she's made a couple of really cool ceramics. So if you can print them, 3D print them, similar-ish thing. And then you would want to do figures. So you want to be able to print really, really detailed things, right? Okay. So I'm going to remove this one, and I'm going to add this new live one. RTH 30. Okay. So the change that I made last night is that it now does events. So I should be able to have it draw the opening range lines at the start of the session instead of having to wait for the end of the first bar. That should be the sign that we did it correctly. I haven't had time to review the code that it wrote, so I guess that's today's task. I think I need to think. Is this actually the way things should go? I think the next thing that I'm going to do is synthetic instrument. Dollar index spreads. And then we're at a pretty good spot that I might be able to just stop using NinjaTrader. Okay, so it did do it. It did do it at the beginning of the session. It also drew a line, a vertical line, a dotted vertical line at the session start. I didn't tell it to add that. I'm always pleased when the AI does something that I didn't instruct it to do, but I probably do need. It's done a better job than what I originally planned for. Ah, yes. That's the true magic of AI, man. I don't buy the AI slop narrative. There was certainly a time about a year ago when it was like, if you're doing everything with AI, you're gonna write crap. So you really have to, you can still use it to write and everything, but you've got to be really close with it. Now, I think that if you do agentic engineering, so you're giving it really good instructions, including technical instructions about what to do and whatnot, you get pretty good code. I'm not going to say that it's immaculate code, but I would say that it's to the point where you get better code than most programmers generate. Me plus the AI results in better code than just me. So this whole idea that it's like all AI slop and that, you know, we're creating this huge amount of technical debt and someday there's going to be these people that will have to come in and clean it all up. And yeah, I don't think that's actually going to happen. I don't think that we're going to get rid of all the computer programmers. In fact, I think you're probably just going to have even more tech jobs. People are going to build more stuff and you're going to need people that understand it on a technical level. They'll be using AI. There'll be more of them. And hopefully we get paid more. So we'll be more productive. And that there's probably still going to be not enough people. Probably still going to be not enough programmers. So, by the way, I should apologize. I should have said at the very beginning, I'm probably going to be a little scatterbrained today. Partly because I'm tired. But we were reading that thread. I don't know if I need to continue reading that guy's post. My point is, if you want to grab volatility created by funds that use news events, then do that. But don't pretend the news actually matters. It's just a front for pricing. I almost see it as a lagging indicator. News is like the MACD or RSI. Like, so if I can move to a different subject, the thing that I think is interesting about what this guy says is he's not just like, oh, well, you don't need to use the news or whatever. He has a different theory, which is very much an outlier and I think contradicts the empirical evidence. They say they use the news to do things, but it's not that the news that matters. That's just a front for them to price in new things. That makes zero sense. Because if I'm a fund, my biggest problem is that I have all of this money that I have to put to work. And by putting it to work in the market, it moves the market. So the last thing that I want to do is put my money to work when there's news going on and the liquidity is less. And I will have more impact on it. That's nonsense. This is a theory based on a stubbornness, right? He wants to see the world a certain way, and so he has come up with some sort of a justification for what it is. It does not match up with any empirical observations that we can make. That's what I should tell him. So I was gonna start like, well, I trade without the news. When I see CPI, I don't look at like what is the current price. I just say, what was the CPI, and will that result in more buys or more sells? And then I trade based on that. Let's see. Resin printing is cool, but I don't recommend it. Fumes, yes, but time is what you might not be considering. Plus, it must always be fully clear. Resin printers can take a lot longer. Are they really that much longer? I was kind of under the impression that like they take a long time, but because I think that there's maybe more time per layer, but then also there's more layers, but you're often printing something that's smaller. So the timing is either way. I think it's still like if I'm going to print a figure, it's going to take all day. was kind of my assumption. Plus, it must always be fully clear. I thought that that the actual figure that came out wasn't clear though. You can paint over it anyways, right? I maybe need to add on this the ability to, you know, have a little margin here, because I find it difficult to see what that bar is doing when it's right up on the edge. One of the funny things that happens to me is I'll be like, ah, you do this. It's going to take me forever. How am I going to do all that? And then I'll come in the next day and I'll be like, oh, well, yeah, once we get this one out of the way, then we can handle synthetic instruments. And then that's most of the stuff that I wanted to have on the data side. And maybe I can just go and start on execution right away. My goal is to be able to put this out for you guys in September. Ooh, by the way, that reminds me, I need to cut a build. I'll open it in a new window. So far on the E-mini Open, it's been all negative. All the market on open imbalances are negative. Sell-off in chip makers drag down stocks on concerns about whether massive artificial intelligence investments will justify high valuations. And the market also fell as higher oil prices raised bond yields. That much overnight. Iran tells Yemen's Houthis to close Bab el Mandeb gateway to the Red Sea if the U.S. hits power network, says sources. Yes, but I think if this really goes, Saudi Arabia will put boots on the ground in Yemen. Like there will be a full-out war in Yemen. They'll have their own problems. Yeah. The opening range indicator is doing exactly what I want it to. Still building. What's the last 489 out of 490? What's the last thing stuck? I'm going to stop it. Try it again. It gives me that warning. How long should I give it? This multi-asset class analysis trading is super fun. You really have to look at the whole system to be like, where's the money coming from and where's it going to, right? It really helps. Really helps to see that, like, oh, okay. Well, they're taking some money out of the semiconductor space. Where is it going to? Seems like it's going to the dollar right now. Kind of get this thing where like everything is down today, right? I'm now instrument agnostic, at least on 80%. Well, I think that ideally you should be able to come in and trade every instrument. Yeah. I mean, the main reason that we don't has more to do with what is funding restrictions than anything else, right? Like if I had a $10,000 account, then maybe I would trade everything. And that's why also if they're introducing micros for all of these single stocks, probably going to switch around the stocks and be like, based on the conditions for today, what do I think is going to result in the most advantageous order flow for us to trade? Switch between them. Probably trade the one that the money is going into that day. Need to make some things that are like, so like you could come in and you can say, okay, which one is up the largest percent, right? But actually that's not what you want to do. What you want to look at, like, you need to look at the percent that it's up and then normalize it by their beta. And then say, okay, which one is outperforming its beta the most today? Trade that one. Or underperforming its beta the most today. Or which is the one that is just the most, there's nothing happening. Then go in those and look for specific order flow patterns. I have 18 DOMs. Oh, boy. That's maybe too much. I think that what you want to do is you want to have like a market analyzer up with the information that you need to know. And then you have one main DOM that you switch to the one that you're going to trade. Or maybe the 3 that you're going to trade, because there might be some situations where you want to trade multiple ones. Let's see what this guy on Reddit says. I stopped paying $100 a month in Shopify apps and built my own Frankenstein with AI. I think SaaS companies are about to have a real problem. I've had a Shopify store for years. Like everyone else, I ended up nickel and diming myself with a bunch of separate apps, inventory alerts, an app to show customers when their orders arriving, one for reviews, one for a chatbot. Added up, and it was $100 a month for a pile of disconnected pieces that barely talk to each other. I have zero coding experience, none. I watched a few YouTube tutorials on Cloud Code and figured why not try it. It started by asking for small specific things and without really planning it, ended up with what is basically a custom CRM plus operations software built exactly for my business. I'm not selling any of this, it's mine, but for my own operation, that's it. Here's what got me thinking. As an entrepreneur, I can now build a main value proposition of my own internal tool and keep adding features that fit only my business. Before AI, that level of customization would have cost a fortune. A full-time developer and agency, months of work. Now the only real way to get to that level of fit is to go custom, because no SaaS product is going to match it exactly. So here's my question / take for this sub. If this becomes more common, doesn't it force SaaS companies to evolve beyond ultra personalized custom fit offerings, while small businesses that don't need something robust or enterprise grade just build their own and move on? Feels like this path, small businesses building their own custom software instead of paying for 10 subscriptions, is going to become a lot more common. Well, the problem here is the particular use case that you're talking about. Creating your own e-commerce e-store is something that you always should have been doing yourself. And only reason you weren't was because you didn't have the skills. So, yeah, well, you're probably still going to use Shopify, right? It's just your own custom apps, though it depends on what you're doing. But you might still want to have access to a certain marketplace or something like that, right? You're going to maintain all that slop now to save $100 per month. That's one McDonald's meals for a family of 5. saying it worked? Did I just not wait long enough? I'm ready to trade in each 18 for in the same time max. I have 6 virtual. Yeah, but like, are you actually... You can't actually watch the order flow on the DOM and all 18 of them. So I feel like it's just a waste of the screen real estate. You can look at like 3 at the same time. So what you would want to do is everything else you just have charts or market analyzers for to do scanning for conditions, and then only come over when the conditions are right. What did it say? Completed. thought that that was true, but it seems to think that I just needed to wait longer. So we're going to run this again. This is going to do its thing. Get to the last package. Kind of funny we're still at 109. Huh? When the retail sales came out and I was a little disappointed, I didn't think, oh, it's just going to be dead for the rest of the session, but let's just kind of leave it alone for a little bit and see what they do. And then, like, nothing ever happened, so I just kind of forgot about it, but it's been a tight day. So we've had some good trading this week. The rest of this month, we should be careful because there's not a whole lot of economic news coming. The market, the treasury market in particular, could get really, really tight again. You have 6 virtual desktops to do it. Well, the other issue is, well, I guess Jigsaw would be able to handle. If you were doing that all in NinjaTrader, I'd be a little concerned. You know. You know, if the S&P 500 is able to beat that 76. That 84 or 04? 7604. If they're able to get over that 7604, that might be a significant line in the sand just because of the way that it's traded. Do you ever try to capture the spread when the market is tight? Not in the 10-year. Because what happens is, well, okay, it's actually the DOM right now is kind of in an interesting situation. It's 2,000 by 2,600. So, you know, if I put a limit order in on either side of this, I don't know if I get filled. Okay, they ticked up. It's stacked behind that pretty well too. It's not a liquidity hole. It's just like nothing's coming in. The market makers are all ready to do their thing. That's kind of curious. Okay, so in that situation, let's just say that you had your offer at 01. You just got filled. So you're short at 01. If you decide that it's a bad trade and you want to get out, you have to take a 1-tick loss, right? So there's no way for you to like catch the edge sort of a thing, right? Whereas if I was able to hit that 01 as it left, that'd be preferable, right? Because I could get back out at break even, essentially. Okay. So what am I saying here? I always try to get that advantage in my entry or my exit. How do you get that advantage right now? If you put the limit order on and you get filled, you're going to get what we call the adverse excursion, which is to say that the mere act of you getting filled makes it more likely that the flow is going to continue in that direction and you know, you lose money. It get you on the wrong side. Okay. But if I use a market order, I probably have to cross over. Like I hit a 1/2 Maybe if I got it as she goes. Maybe if I got it as she goes. But if I got it as she goes at 01, I think I might still be waiting for a fill at 01 half, for instance, whatever, right? You know? So really what you would like to have, more ideally, is that there's not a lot of liquidity at 01 or 01 half. And they're trading back and forth across these prices very easily. And I see 500 contracts on the offer, but they're regularly trading several thousand every minute. So now I know the chances of me getting filled on both sides of that is really, really high. That's a better situation for trying to capture the spread, right? So when the treasury kind of gets into this mode right here, if I can draw the picture here. Okay. See this thing? Right? What that means is you can get long or short really easily here in the middle. But if you are trying to get a fill on the offer up here, it's not happening. And if you try and get a fill on the bid down here, it's not happening. So when the treasury gets like that, I don't want to mess with it. You really have to have an advantage in the queue to play that, right? So what you could do is you could be doing an alligator. What's an alligator? Oh, I shouldn't have brought this up. I'm going to talk about it anyways. An alligator is where every time that it ticks up or down, you put a bid or an offer behind it. So now, hopefully you have a spot. You know, right now they're stacking 2,000. So if you do this correctly, maybe I would have a bid at 01 half with 2,000 contracts, right? And then if I see it starts to create this hole at 02 again, and I go, okay, yeah, there's a hole. It's going back and forth across 20 really easily. So I can get my order filled at 02 really, really easily. And if I think that, you know, the future orders are going to be net down as well, because I do want to be in line with the trend, I know I can get in here and I have an okay position to get through here. So they don't have to clear it. I only need 2,000 to trade or whatever. Or maybe, you know, if I had 1,000 in line, I'd be filled and then you're out, right? So if you have a queue advantage, then you can do that in those spots. But for most of us retail, when it gets really, really tight like that, it's not a good trade. That's kind of why the NQ is a little bit interesting. Because when I consolidate, when I use the tick aggregation, so that, you know, it's like every 8 handles or whatever it is right here. Yeah, every 8 handles, 32 ticks. You know, it's able to clear 3 prices pretty readily. So can I get a fill here and here? Yes. And do I know what the trend is? Yes. Okay, so we'll try it. This might be a 50-50-ish. So far, we're doing okay-ish. There you go. Okay, it won. So that makes sense. Was that a good explanation? I think I was only interested in NQ because I was talking about it. So I wouldn't say that was like the super, super high probability sort of a thing, but I was just looking at it like, well, they look pretty clearly trending to the upside, and I think that they're at least going to want to get to that opening range high. And I can see that they're ranging in this, you know, I'm getting fills on both sides, and they're reluctant to go below this. So if I can get a fill on this side, pretty good chance I can get a fill on this side. That's what you're looking for when you're looking for, like, the scalp. Yeah. Now, was it actually that good of a trade? I'm going to say no. Look at the MAE on that. Yeah, I got the 32 ticks. But the MAE was 32 as well. So it almost stopped me out. It just barely didn't stop me out. That's pretty funny. That's pretty funny. On the other hand, if I had tried to get it one spot down on the ladder, it wouldn't have gotten filled. So that was really, really lucky. Okay. But this is still a good example of what I'm talking about, right? When the treasury in particular gets really tight like that, it's just not a winning trade. There's one other thing that I should say about this. The way that I think of it is this. You're not seeing market orders come into the market. You're not seeing large players active. So there's not some sort of major flow coming that I'm trying to front run or whatever the deal is, right? Then I'm basically just playing against the market maker. You will not win against the market maker. If it's just you and the market maker, you will lose. Because it doesn't matter what you do. The market maker basically, it's like playing rock, paper, scissors, right? Like, let's say that we have all of us here in chat, or maybe we have 1,000 people, and they're all playing rock, paper, scissors against one guy. Then what is he going to do? He's going to, and then he can wait and see what everybody else picks, right? So he's going to wait until all 1,000 people have picked. And let's say that 60% of them pick rock, then what's he going to do? He's going to pick paper because he makes more by picking paper, right? And then the next time around, everybody goes, oh, well, he picked paper, so this time around I should pick scissors instead of rock. And so now 60% do scissors, then they're going to lose. And if people will figure out what's going on there until it's basically like 50-50, right? 50% will pick rock and 50% will pick scissors, or maybe it's split 3 ways or whatever, right? And the whole trick is to be not on the majority side, because that's the one that the market maker is going to choose to lose. Make sense? So we really want to have a flow. We want to have future orders that we are predicting are coming in and that we are front running. We're taking a position so that we can then sell it to that flow later. And if you don't have a flow like that, just don't trade, because the market maker will just find a way to screw you over. Now, in the NQ, that's not the case. In the NQ, they are coming up to a critical spot, the opening range and everything. They're going to fight over that and see where they go. So on the trend up there, I think it was a pretty good bet that, you were going to continue to see some flow coming out long, and I could take a small trade because it was a small flow. Okay. It was that I just didn't wait long enough. So now that I have it built, think there was something that I needed to do to cut a build to that like marks and tags it and everything, and I'm missing. So how do I identify a flow that's got momentum? So what we want to do is we want to identify the flow factors for that day, and then do our kind of analysis and summation of those flow factors, right? So what are flow factors for today? First of all, I'm always going to look at seasonality first, because that applies every day. So what time of the year is it? What time of the month is it? What day of the week it is? And then time of day also matters too. But so it's summer right now. So there's a lot less market activity in the summer. There's a lot less liquidity in the summer. Got to keep that in mind. We're in the middle of the month. So we had retail sales. The retail sales was kind of a meh. There's not really huge news tomorrow. So that was like the last bit of news. So anybody that was looking to like hold off until they got the retail sales, they're going to make their move now. But the retail sales didn't really say anything. I think that the guys that are in the treasuries are pretty safely positioned. So based off of that, I think I should be expecting slightly less flow than usual now, right? There's going to be more flow at the beginning of the month than the end of the month because there's more economic news. The economic news is all heavily tilted towards the first half of the month, right? So Thursday. So Thursdays are okay. We get okay amount of activity on Thursdays. Usually you have the most activity on Wednesdays. Mondays and Fridays, you got to be careful about, okay? Because Mondays are often really quiet unless there's a big piece of news. And Fridays often have a lot of really confusing flows because people are like closing positions for the weekend, right? Okay. Well, we've got the Iran thing going on. That's maybe a flow to the downside, but I don't see anything actively trading that right now, right? So where that puts me at is I'm expecting flows to be relatively low unless something changes that causes more flows on fears about the Strait of Hormuz to come in, right? So unless I start to see aggressive selling pop out of nowhere, I'm probably just going to sit here, right? So each one of those are a flow factor, something that I know that can potentially predict future orders. And I'm going to look at everything that I know. Everything that I know probably should be happening and possibly could happen, right? And then I put it all together. Sometimes you will get a situation where you put all of those things together and like every single one of those says that they're going to be buying. It can even be in situations where it's like before anything happens, like there's not any news involved, but based on momentum and the way that the market is pricing the Federal Reserve and the time of the month, and like it's the first day of the month, they tend to buy in the treasuries. That's one. I add everything together. Oh, they're going to be buying treasuries, right? Then all I need is a tiny bit of aggressive buying in the treasuries, and I'm gonna get in. Right? As soon as I see anything that confirms that they are indeed buying, I get in, right? So that's the approach. I'm kind of thinking the more I do it, the more into it I am. I'm not getting a whole lot of like validation from people on social media saying that they like that term or anything like that. I don't know how you would, but I'm starting to call our approach flow factor trading, right? So it's basically, if you say I trade fundamentals, then what people think you're doing is you're saying I am making a calculation of what I think that the market should be at, and then if we're below that, then I buy, right? That's fundamentals trading. That's not what we're doing. What are we doing? We're predicting future orders. We take all of our factors that predict future orders and put them together so that we have a holistic view of the market, and then determine what the imbalance is and base our trades off of that. By the way, I'm kind of doing, part of it is that once you're doing this every day, like what you should do is at the end of the day, write down, okay, what were the major flows that we saw in the markets that I'm watching today, right? Well, maybe today in the treasuries, you don't put a whole lot of anything because it's not going to move a whole lot of anything. So then let's look at the S&P 500. Well, we were down overnight because of concerns about chip companies, right? And like, will the numbers really justify the valuations that we currently have? So we're down because of that. But then, there's not a whole lot else going on. The retail sales was good, but not, nothing too crazy. Probably you're going to see some mean reversion flows come through. That's one factor that we have. So when I come in and I start to see, they've developed a range, now they're starting to move up towards the other side of that range. That's a flow. That's a flow that I can maybe use. Now, that's a teeny tiny flow. That's a teeny tiny flow, but was it enough for a scalp? I guess in that situation it was. Although it was a little bit questionable, wasn't it? I got very lucky on it. Ideally, though, you have a situation where you add together all of the flows and you go, wow, there's a clear imbalance and it's going to turn into a trend day. And you predict the trend day before it happens. That's what we're really, that's the pinnacle. That's when you've really applied this framework correctly. When you say there's not any news or anything like that going on, but based on my analysis of the flows, this is going to be a trend day. Okay, that all makes sense, but specifically in the order flow, what do you see happen that gives you enough conviction to get in? Okay. So try and put yourself in the shoes of a trader that has to fill a ton of volume. Okay? Like, we're coming in and I'm trading one lot. I look at the 10-year treasury and there's like 2,000 to 4,000 contracts at each price. But these guys, they're often trading 50,000 to 100,000 contracts. I'm not even joking. When you get into like the sovereign wealth funds and options hedging and stuff like that, like, these numbers can get really, really big. How are you going to buy 50,000 contracts? Right? Well, you got to be sly about it, right? You don't want to just come in, all right, market order 50,000 contracts. You're going to whoosh, and it's going to go way high, and you're not going to get a very good price for your orders. So what you do is you kind of split it up and you trade it very, very slowly over time, right? So I'm looking for, I would kind of put it into categories. One is, I would like to see a general imbalance, right? So if I come in and I look at the treasury right now, I don't think it's worth trading. But when I look at the cumulative delta, there is a pretty clear and long, there is at least one order being traded right now. There's somebody, he's buying. So the general rule of thumb is if a large meta order is being executed, they can execute at most 50% of it on the limit, which is to say, if they're buying, they can maybe buy half of it with limit orders on the best bid. Okay. If I see it comes down a tick or two, and then all of a sudden there's this huge iceberg there at that's immediately like, especially if I can't see any other reason for there to be an iceberg there. you will just kind of get an intuition for it. And you'll be like, that's a little odd. There's an iceberg there. Oh, but I was expecting there to be an imbalance on the long side. And I see an iceberg there, and I see that cumulative delta is moving up. That must mean that that flow is actually there. Now I can take the trade, right? That's the sort of thing. Or you might see them execute really aggressively when it seems like they shouldn't have to, right? It's just sitting there. It's kind of slow. And then you see somebody gobble up 4,000 contracts and tick it up. That's like the sign. So here's what they do. Remember that there's a square root law of impact, which is to say that the impact scales with a square root. So if you trade twice as much volume, you don't get twice as much movement. You get 1.41486, whatever the square root of 2 is. I need to memorize the square root of 2 better. Okay. So when that happens, why does that happen? Because the market makers go, oh, there's an imbalance. So somebody knows something. Somebody's executing. So I need to reduce the amount of liquidity that I'm offering to account for that. And then there's less for them to trade into. They don't want to trade into that without screwing up, moving the market even further. So they're going to slow down, right? But what kind of paradoxically happens is that then price stays there for a really long time. And if they just continue to execute, they can execute in that spot for a really long time. And so it's actually kind of a trick for them to reduce the impact of their orders. Come in, trade aggressively to create that hole, and then execute more slowly within that hole. Okay. So if I'm seeing it, it's, there's not much happening in the market, but I don't see a liquidity hole. I see pretty healthy liquidity on the inside bid and ask in the 10-year treasury. So 3,000 by 3,000. That's what it's doing right now. If all of a sudden somebody came in and bought 4,000 contracts market buy, I would immediately be in. That to me is, okay, the liquidity is normal. He is going to go and try and create that hole now. He's going to gobble up that liquidity that's available. And then once it kind of flattens out, I'm seeing that liquidity hole. I'm getting out because then it's just going to sit there, right? So you understand how they execute. Now you can kind of think about it tactically, right? You can also think about it tactically from the perspective of your flow factors, because sometimes your flow factors will have a timing associated with it, right? Like certain types of players, because of what they're doing, they will wait for the news to happen first, then they'll execute. And they might change how they execute based on the news. If I have to buy, but the news was bad, so it's causing the market to go down, I'm going to let it go down first so I get a better position. I can be more passive versus if I need to buy and then the news is going to push the market up, and I'm going to be really aggressive and try and get as much of it as I can first before anybody else comes in. Right. So here the thing is that once you look at flow factors, now you can kind of start to game out how might that individual flow execute, and then you're looking for signs that that's happening on the DOM. Right? So I'm using the DOM to confirm my predictions about what's going to happen based on the flow factors. And as soon as I see something that reinforces that, then I'm getting in. Or in the case of the one tick scalp, I'm looking for a situation where that liquidity hole is already kind of formed, but I still have a clear direction, and I can see iceberging in everything to kind of give me a spot where I think that my my take profit will get hit before the stop gets it. Snatch gas sold before the inventory news. For sure, it's less than predicted. So for some reason, my natural gas is not shown on my market analyzer correctly. Must be on the wrong contract or something. That's what flow factor trading. I don't know, something about it. I like the ring of it or whatever. If every retail trader came in and started trying to analyze the market from the perspective of flow factors, that would make so much of a difference for the quality of the community. You know. So what order flow patterns do I need to memorize? Well, I don't know if it's necessarily memorization, but you're basically picking it up right there, right? There's as she goes, which is there's not a whole lot on. Well, let's say that we're buying as she goes. That means there's not a whole lot on the offer, and I'm buying into it just as we're about to tick through it, so that I'm long, and then it ticks up, and there's liquidity behind me. I can immediately sell back into it, right? And then iceberging or refreshing is the exact opposite of that. It's really low, and so people are hitting it, but then it turns out actually there's more liquidity there than you thought, and they're not able to tick through it, and just more and more and more trades there, right? So these are two opposite sides of the coin, right? Because if it was always just as she goes, always worked, then that's all anybody would do. So we'd all just sit here, and every time that it was less than 50 contracts, we'd all try and hit it. And then the 50 people that hit it correctly made money, and everybody else lost, right? That it was that simple. But there's two ways that they can kind of do it. They can say, I can use a market order, or I can use a limit order. And that's kind of how they mess with you, right? So that's as she goes, and iceberging, refreshing, backtaking, absorption. It's the two major things, right? So if you haven't watched my order flow video series, I would go and watch that. And I think it's like the second or third video I talk about these sorts of things. I have one video, I believe I have one video there where I talk about as she goes versus icebergs. And then I have another video where I talk about dealing with large orders. That is, at the high of the day, there's like 10,000 contracts, like way more than any other price, and it really sticks out. What's that about? Okay. And I kind of talk about a couple of just, I wouldn't say that I'm giving you like predictive signals or anything like that, but really more talking about like the range of possibilities. Like this is what you're going to tend to see, and a little bit of heuristics about it too. Like when you're seeing a really big order and it's like late in the session, just ignore it. Like, why is some big trader with a huge flow that you didn't predict all of a sudden coming in towards the end of the session? That doesn't make any sense. They're probably trying to stir up liquidity for themselves so they can get out of a position and not actually, doing something that you can front run. So I'm more interested in that beginning of the session, for instance, right? That's a heuristic. But if you watch those, I think you have a pretty good idea of what happens. And then, honestly, there is a very major element of building intuition about it. You want to come in and watch what happens every day and do your analysis of what the flow factors are that day before and after your session. Like, do your prediction, and then at the end of the session, say, what flow factors actually were there today, and was I, did I miss some? Or, like it didn't do what my predictions suggested, so what did I miss, right? You do that every day for 6 months, you develop an intuition of it. You absolutely do. And you kind of get this feeling that's like, well, that's weird. Why did this happen? Why did this happen? Because what that is that's your brain building that network based on reinforcement learning. And well, if you're just watching the market, it's all noise, and how your brain sorts that out tends to be kind of random. But if you understand how the market works, which is what that order flow video series, go all the way to the end, that's what the and like what the empirical properties are, which are what the later videos are about. And you're looking at the flow factors every day, right? Now you're going to build an intuition that's much more likely to actually be useful. And then there's parts of that I can't explain. It's not conscious, right? Your brain has developed connections, and you just get the answer, and you don't completely understand how it's giving you that answer. But if you're constantly tracking your performance and doing all of that work, your mind will eventually adjust and build a good intuition. I guess with the caveat that you got to realize that just the order, like your intuition of the order flow itself, is a small component, right? Amir, hello. Hey, I am trying to build the thing for you right now. I had some issues this morning because I haven't built like a zip file in a while, and I forgot how to do it. But it's making it right now. And if it takes more than 5 minutes, then maybe something's wrong. Amir is going to be one of the alpha testers. So if you have rhythmic data, hit me up on Discord so that you can try the alpha of our trading platform for free. Limited free alpha. Is that what it should be called? That's where I was kind of fretting yesterday, though, was me realizing, like, oh, most of the people that will buy this, because it's rhythmic data, are trading on funded trader programs. And anybody that trades funded trader programs probably doesn't want to watch my stream because I rag on them all the time. Well, I'm still going to rag on the funded trader firms all the time. Finished. Release profile. Optimize targets in 3 minutes, 19 seconds. Aha! Now it's there. Now it's there. Yes. Get rid of this. Oh, it's too big. It's way too big. $400 megabytes. That's way bigger than I thought it was going to be. I guess it's a reasonable size for an application of this type, though. And I do include some things like fonts and stuff like that. That probably makes it a lot bigger. Although font shouldn't be hundreds of megabytes. I don't know. But I can't just send that on Discord, can I? Nitro supports up to 500 megabytes. No, we're going to have to use Google. Yeah, it should be good. And then I also have to come over here. There. Hopefully. Sure. There. I saw John Grady say you should be trying to scale up enough contracts to get to around 200 or so a tick. To actually make a living trading treasuries. What do you think? So when you say 200 a tick, do you mean $200 a tick? Or 200 contracts a tick? I don't know. To be honest with you, I really don't view trading for a living as very viable. So I don't spend a whole lot of time calculating or thinking about how many contracts you really need to trade to be able to, you know, like start with one contract and size up as you start doing well. Okay. And then maybe you can start thinking about that sort of a thing. But most people never get that far. Like, even with everything that I can give you, all of the empirical information, correct information about the market, you know, tips about getting better information about there and all that sort of thing. Everything, adding all of that together, still very, very difficult to make a living as a trader. It's a day trader, and you probably have to have a lot of money to start with. I think John says that too, but I don't know. I think he's trades a bit larger size than me, so maybe he does that. I don't know. I've always kind of wondered with John, because I mean, I love his book. His beginner's book is absolutely, everybody should read that book. I love that book. But does he make his living just from his trades? He sells his course, and he's got the webinars and stuff. He could probably make a pretty good living just on the webinars and everything else. I don't think that takes away from the quality of the information that he gives. It's just, let's be careful about this dream that we're going to make money from it, that we're going to make a career out of it, right? Because what I see a lot of people do is they get out of high school and they're like, I don't really have any skills. I know what I should do. I should become a day trader. That's what I'm going to build my career on. And then they don't go to university. They don't develop any other kind of career. And then 10 years later, they're still struggling with trading and they've done nothing with their lives. Don't be that person, right? Keep trading as a hobby. Have a primary career that makes good money. And then when you are making good money and you have excess capital to risk, then you can kind of supercharge your trading. And then that's where trading can actually be really worthwhile. And hey, when you get that money, you might not put it into your trading first. You might just put it into owning some stocks. That's what I've done, and I've made a couple tens of thousands of dollars from that now. Oh man, you know, like if it was really just about like the performance, you know, I probably should just teach how to manage a portfolio, because my portfolio of stocks has done really, really well. And if all I did was talk about stocks and show my portfolio, then you know, that would be better social proof for people. $200, he said, at least 20 contracts. So, you know, there is a one point that matters a lot. That you will never hear retail traders talk about, because I don't think very many of them ever get to that point. But it is basically what I would call the point at which pyramiding starts to make a major difference. So if you can, right now, to trade a 10-year treasury future, you basically need $500 in margin, right? So if you can get yourself to the point, which would be about 32 contracts, where you make $500 a tick, that means every time that it ticks up, you can add a contract. Yeah. And then it ticks up the second tick. You add you know, so now you have 32, 33, 34. And as you get further and further, you know, you're making so much now that you can add 2 contracts. And it just, and they call that pyramiding. So the guys at the bank, they told me once you get to the point where you're pyramiding and like it moving up or down causes you to adjust your position by the number of contracts that you can hold, that it becomes a very, very different game. Do you really get 200 day trade margin on Iron Beam? On Edge Clear, they basically require you to have like 1,500 or something. But I think it's more complicated than that. I think it's like you have to have 1,500 minimum, but then the actual day trade margin is 500. I've never gotten to that point. I've never messed with that sort of thing. I come in, I'll trade micro treasury futures. I'll make $10 on a trade, and I'll pay for all of my costs that month, make maybe like $50 to $100, and I'm happy with it because I just want to keep trading, And I suppose I could come in and like put $5,000 of my own money down on it and really go for the moon, but I just don't feel the need to do that. And one of the things is that when I start to size up, it affects the performance usually. It's like, I'll get enough to where I'm like, okay, now take 3 contracts. So that's why past few years I've kind of been practicing managing multiple contracts, but I don't know if I feel 100% confident in my method for managing multiple contracts. To be like, okay, I want to take like 3 contracts at the beginning, but then I'll take 1 off for a small winner and use that to try and let it run or something like that, But then I'll do that and I'll have a position go against me right away, and like, oh, okay, that's the problem with that, right? And I've never been able to find any kind of really hard math empirical evidence to suggest doing it one way or another. You're crushing my dreams. Well, that's what I'm here for. You're welcome. Honestly, I've met guys. I remember when I first started trading. I bet you he's still around. There was this guy. I think he found me through the Futures IO forum. But he wanted to talk to me a lot because I could do stuff with footprints. And his approach was like, I put everything out there, all of the major ways of trading that retail traders are looking at right now. I have them all up and I see what's working that day, and then I go and I trade that. And so he was interested in getting a better footprint that not everybody had, and so that's why he was talking to me. And he had been doing it for like literally 20 years, I think. He'd been doing it for literally 20 years and was not profitable with it. And here's the thing, is that if you trade responsibly, you trade in a way that's sustainable and that you can have good numbers over a 5-year time period and all of that sort of stuff. It's not really a living unless you already have a ton of money. So almost all of these people that you see coming into financial markets and quote unquote making a living from it, at some point they did something degenerate. They took a risk that's probably inadvisable to get to that point. Okay? So I'm not knocking on them for having success, but what I am saying is, you gonna bet your life on that? Because that's gonna be like your whole life. Probably shouldn't be plan A. Yeah? Probably shouldn't be plan A. Please help unsolve the puzzle of gold and equities going down together with oil still? Well, but I mean, what do you really call gold down? I mean, it's down overnight, but that is maybe just mean reversion. Down with the equities. Oil didn't really move a whole lot. For some reason, the chart over there in oil looks like the same chart that oil has had every day. This is like the same thing every day over there for some reason. I don't really think, at least in this regular session, that there's really been a whole lot of really major flows pushing this market. Like, just look at the equities. This is, or ES. This is classic, man. This is so classic. Because there's so many retail traders that trade the opening range. They call it the orb strategy, opening range balance, right? That's why I have this indicator. A lot of the stuff that we do with indicators have to do with the session. Like, what is the first 30 minutes of the session? So this is a really good test for it, and that's why I'm having it and why I'm focused on it right now. Not because I think that there's edge in opening range balance, okay? And what you see happen here is so classic. What happens with opening range balance when it kind of screws you over is that they go and they say, okay, here's the balance. It's formed in the first 30 minutes, right? And then we broke out from the high. So now I'm supposed to buy it in the hopes that it's just going to trend the rest of the day. And what happens? They break the balance and then it starts to get tight and it just goes back and forth and chops around. That's very, very classic. And that's what they did, is they kind of did the technical thing that gets everybody's excited and then nothing. That's why, again, when I took that little scalp, which I don't know if I would have if we weren't talking about it at that time, right? It was, I think that they're going to break the opening range, but that was it. I didn't go in, because if I really thought, like, this is the thing about the opening range that makes no sense to me. Okay. You're waiting for it to break the opening range, and then once it does that, and maybe you wait for some confirmation, and then you get into it and you let it run. Well, why aren't you just trying to predict which side of the range it's going to break and when it's going to break it? That was a case where I could have said, yeah, they're going to head for the opening range. I want to get long here, and I'll take it off at the opening range when all you retail traders are selling. Or, sorry, when all you retail traders are buying, right? I can sell into you. Basically take my profits on your entry. That's the best. That's really the way to trade. This is the thing that I think is so weird about technical analysis, right? So you're waiting for a pattern, and then you get this confirmation signal and you get in. And I'm thinking, no. I want to predict that thing is going to happen, already be in, and then when it gets to that spot, getting out while you're getting in. Your entry is my exit. Prop firms could take most of the risk off and allow for larger size, though no. Well, so the problem with the prop firms is the same thing, that is like you kind of have to take degenerate risks. So the prop firm really trains you to trade in a very aggressive way that kind of takes sustainable, effective ways of trading off the table, right? It becomes more like find the technical pattern that seems to work most of the time and hope that it works long enough for you to get the payout is what that turns into, right? I've seen people make, decent amounts of money, but like there's been people on YouTube doing videos and stuff like that, and you're talking about like they made $100,000 from prop firm trading. Like those are the people that are making the most off of prop firm trading. And then the funny thing is do those guys ever go and make their own account? No, they don't. Because they kind of know that everything that they've learned only allows them to make money from prop firm trading and not from their own account. So it doesn't scale, basically. And then it's like, yeah, and is $100,000 a year really that good of a living? No, sir. I sure have been getting a lot of spam phone calls lately. So now listen, here's the other thing. I think a lot of people, they do the prop firm just because like that's the most practical way for you to get into the market, right? Like I don't want to save up $2,000 for my account and $1,000 for the software and all of this stuff when I can just spend $150 a month on the prop firm. And the problem is when you really start to do all of the math, and it's like, well, it takes me at least 3 to get funded and maybe 6 to get a payout. right? I've already spent $1,000. I might as well have just saved it and started my own account. And I would get more trading out of that account than I got out of the prop firm. So, I mean, I guess it depends on what you're going for. But those guys aren't trading treasury. Well, that's true as well, because the prop firms basically all banned treasuries. Because there were too many people abusing the queue. I mean, it's sim trading, so they don't... It's not just sim trading, it's rhythmic sim trading, so they don't fully simulate the order book dynamics. So people figured out on treasuries that you can kind of cheat it. That's why they got rid of them. It's kind of like renting an apartment while you wait to choose a house. The money going in the apartment is just going away and not going towards building or buying your house. And we got to build our homes up. Yeah. And like, meanwhile, the houses aren't getting any cheaper. Right? But you have to live somewhere. The difference, that allegory kind of falls apart. That comparison, what's the correct word? It's not an allegory, but you know, that comparison kind of falls apart because you have to have somewhere to live. You don't have to trade. Yeah, analogy. Probably analogy is a better word. Lucid has a prop account with no monthly fee and no. Wait, what? What is it then? So Lucid trading, they seem to be doing this thing where like people will post, oh, I got a payout, right? And it always has a Lucid. It's just advertising for them. And I see a lot of that from them specifically. Let me see here. How has it changed? Well, they have the standard 25, 50, 100, 150. And the 25K eval is $80 right now. So what's the account that you're talking about that has no monthly fee? Or are you saying it's a one-time payment, so if it takes you 3 months to get funded, you still only pay $81? Is that what you're saying? Because that's kind of nice if that's true. It would maybe make me, that would actually, for $81, and if that gives me, and if that gives me $81, and that gives me 2 treasuries, and I can spend like 3 months to pass it, maybe it'd be worth trying again. Actually, you know what? I hate saying this, but like, I think that at some point in the next 2 years, I will find the need to do a prop firm account. Just because I think that most of my customers are going to be prop firm trading. So I'm going to want to do it, kind of see how things have changed a little bit, play around in that space, and then see how it goes. That's why I'm kind of like, well, if they won't let me trade treasuries anymore, maybe I can just do a really technical thing with NQ. Get, you know. That's why they're popular. Okay. I still refuse to do the affiliate codes for them, though. I refuse to do the affiliate codes. I will, you know, they can use my platform. Maybe you get a special deal at the very beginning where if you use my platform, you get a discount, or I'd love something, but I'm not going to have an affiliate link still. I refuse to do the affiliate link. Yeah. Because I feel like that the affiliate link would just be dishonest. I'm encouraging people to do something that I don't really think that most people should do. I don't know. It's not even like I don't think anybody should do it. It's just you got to understand what you're doing. I don't think most people understand what they're actually getting into. I don't, they think, this is a viable career and they're giving me a step up into a viable career and all this. They don't understand that it's basically all designed to turn you into a degenerate. You know, you got to get into some degeneracy sometime somewhere. Yeah. And more broadly, I feel the desire to take more risk. You know, I've been risk adverse for the past 5 years for family reasons and stuff, and I feel like we can charge it up again.
Block by.
Because in all honesty, if I'm not taking enough risk, I feel like I'm squandering my life. I feel like you're just like everybody else. It just sits there and takes a paycheck. It never does anything. Nah, there's got to be something. There's got to be a grind. There's got to be a risk, something going on that might work in your way and might not. And you're taking that risk because most people don't. Have you seen Apteros? That's on my list. Oh, yeah. No, you're right. Yeah, that's the one. That's the one that is. Oh, do they allow treasuries? 500 for one time. But they're the one that, like, as soon as you pass, you're on a live account, yeah? Just pull a quick 1K out and do a 1K challenge? Yeah, I mean, that's not that fun for me, though. I could literally come in here and say, flip a coin, and then take a trade on, you know, like let's say 64 ticks in NQ or something like that, right? I'd have to size it all appropriately so that, you know, the chances of me busting the daily loss limit are eliminated, right? But basically turn it into, I either, it's random and I either make money or I lose money that day, and then just run it until you pass it. And you'll pass 1/3 of the time. And if I do that, that's not interesting to me. You know, there's got to be at least some skill to it, or at least something interesting about what you're trying to do to see if you can get it to work. Something that you know is just totally random is not interesting. If I could do it with this NQ trade, I don't know, man. I should have taken more today, but I'm feeling pretty good that I did it once and it worked, huh? Like if I just did it once a day, if I just, oh yeah, time question. What time did I do it at? I did it at 8:06 on my clock. So, you know, add 2 hours. 10:06 Eastern time. Once you've made it 10,000, you're live with a seat on the exchange. That's a little bit different. Oh yeah, time of right now. It's time for me to go. You're right. Yeah. But I wanted to finish the thought. If I were to come in and just take this, like, you know, enough that I most days I have 160, at least 160 most days, right? Like that's workable, right? That's what you would pass if you did that. But we'll actually see. We have to take this way more times before I'm like, I'm willing to try this on a proper account to see if my feel of NQ is good enough or not. But so far, I'm really a little bit weirded out. Like, it shouldn't be working as well as it is. Shouldn't be working out as well as it is. And especially when you look at the numbers like MAE 32, like the MAE MFE is kind of telling me it doesn't work. The MAE MFE is telling me that it doesn't work, but right now it's working. So, okay. Could you pass a combine and get a payout with it? I think maybe you could. Probably, though, you're right. I would stand a better chance of passing if I just continued to do what I do, but on the E-mini, and just know that particular situation where I can just shoot for the moon, right? More than your salary. Oh, well, we're not. We're just talking about getting a payout. That's all. We're just talking about using it enough to understand what might help the prop firm traders that I'm not aware of has changed in the past 6 years. And, you know, get people to be like, oh yeah, I want to use that Seth guy's new platform. That's the primary thing. Because at the end of the day, what I'm really best at is software development and building trading systems. Like, I don't think anybody can do it better. Nobody's done it better. My platform is already better. This is already better than NinjaTrader. There's some things missing, so I can't switch over to it completely. But it's already better than NinjaTrader. And it makes me super, super excited. So yeah, if you're using Rhythmic data, send me a message on Discord, and I will give you I haven't had anybody verify it yet, but I have a build. I send you a 400 megabyte zip file, and I'll give you a key. All you have to do is unzip the directory. There's no installer or anything like that right now. And you can try the alpha out for the platform. And we're getting pretty close. That I'm hoping that like another week or two, and I should have most of the major features that I need. Maybe then, well, no, I definitely want to work next on a market analyzer. So I think I'm going to get dollar index, spreads, and then a better market analyzer. And maybe some tools in the market analyzer that will help with single stock futures. That's the other thing, is single stock futures might be really interesting. So, and with single stock futures, I might do something like a day trading momentum strategy of sorts. So that could be interesting. And then maybe I work on execution. Maybe I can just do execution on my own before September. Or maybe Steph will help me. Hopefully Steph will just help me. Because he wrote a DOM for NinjaTrader that I thought was pretty good. Yeah. I'm gonna get going, guys. Stay excellent, team.